Okay, so thanks so much for everyone joining today. Today we're going to talk about FTX, and more so than probably any other investor webinar we've done before. Today is going to be an interactive session where I expect the vast majority of time today to be a Q&A rather than kind of me talking for a while. So in that vein, any questions that anyone has, feel free to ask. Just going to give a brief summary of, kind of what happened with FTX and a little context on how Unbounded has, made their investments and how we've managed risk over the last several years. So, okay. Dave, I'm just going to make you host while I do this for a second, so you can admit people. A lot of folks could join.
Sure thing.
Okay, so for years now, some of the highest returns in crypto and blockchain have come from primarily two things: investing in crypto assets directly, and those going up a lot, notably being early to the Bitcoin or to Ethereum and holding on to that token would have given you some of the highest returns in investing history. And then investing in the companies that are often called blockchain infrastructure or crypto infrastructure that kind of facilitate kind of the trading and investing speculation of these different assets. So kind of notable categories are like miners, prime brokers, exchanges, and some of the highest returns on kind of the pure equity side of things have been crypto and blockchain exchanges like FTX, where from our perspective at Unbounded, what they're facilitating is largely the the trading and speculation of glorified Ponzi schemes, such that even if they've had an incredible run of amassing, many billions of trading volume to date, you kind of have to bet on more and more people and more dollars wanting to bet on these assets that really have no fundamental value, and that continuing for many years for an equity investment in one of these companies at any stage to make sense. So from the kind of the beginning of Unbounded really reorienting our thesis in 2019, about 3.5 years ago now, we've avoided companies like FTX like the plague. And not just because of the risk of kind of fraud, but more so just the fundamental question of, okay, is there going to be a market for billions of people buying derivatives or buying spot, FTT or Binance token or things, or even Ethereum or BTC in a number of years? We felt that that is not likely to happen. So those investments haven't made sense for us. And that's been the primary reason we've been able to avoid, blowups like this. But what happened with FTX exactly? So at a high level, it seemed like Sam was misappropriating funds, illegally, and not communicating this to his customers, to his auditors, to basically anyone on the team besides a few close people, and was loaning out those customer funds to at least, one entity, Alameda Research, that he, owns and has a stake in. From the beginning, there's been this huge conflict of interest of having a hedge fund that he has a dominant ownership position in as a preferred market maker for his own exchange. And this kind of shows the, some of the issues and problems with that. So basically the funds were lent out, and that money was used to long kind of these glorified Ponzi schemes in the crypto market. That didn't work out as a trade. So there were not the funds to, return to FTX, and there was a solvency crisis. Lots of people have written eloquently about this. I'm a huge fan of Matt Levine and highly recommend his recent pieces on this. But in short, this wasn't a liquidity issue. This was a solvency issue because FTX did not have the funds that they said that they had. So there's now been contagion in kind of the entire crypto and what's called blockchain market, but really is kind of this crypto market. And you've seen a lot of, folks that have generally been looked up to as, well-respected hedge fund managers, even venture managers, that we've now learned have had, 10, 20, 30, 40, even 50% of all of the fund's assets on FTX. So yeah, there's been a huge fallout here, but what does this mean for the future? From our perspective at Unbounded, this is a really good thing, and this was an inevitable thing. We would have wished that perhaps Alameda and maybe even FTX folded earlier this year when Three Arrows Capital blew up and they didn't kind of keep this going, and maybe billions of dollars and people's hard-earned money wouldn't have kind of vaporized with this whole scheme. But that's not how it played out. And ultimately, most of the crypto world today is built on a negative sum speculative game. So the sooner that ends, the fewer dollars and time and attention that people will waste on the crypto world. And where might that energy go? So for a lot of people, that might kind of scare them away from anything blockchain related. But what we're seeing at Unbounded is over the last week, I've probably gotten more people reaching out to me and more conversations from folks that have been like, okay, wow, this is actually a really good moment to reflect on what's been happening on the decisions that I've made. And when thinking about it, there might be a bad taste about crypto or even blockchain. But if you just think about it for a moment, if you're in this position, whether you've lost money or not, it makes a lot of sense to start to reconsider, okay, is there a way for me to have exposure to this technology that doesn't involve DeFi, that doesn't involve a centralized exchange that's facilitating crypto asset trading, investing, speculation? So a lot of people are asking themselves that. And what we've seen, again, just in this week or so, that a lot more eyes, a lot more dollars are looking at what we're really excited about in Unbounded, which are companies that are solving some of the biggest problems in the world that are leveraging an efficient or scalable blockchain, where crypto, Web3, decentralized protocols are not a part of their business whatsoever, and where we view having tokens or having to use tokens as a bug and not a feature. So we're optimistic that this is going to be a big accelerant towards dollars, towards what we think the future of blockchain will be. And yeah, thanks so much for listening to this little spiel, and happy to answer any questions now. I see a lot of names here that I've been speaking to over the week. So again, just feel free to kind of raise your hand in the chat, or if no one's talking, unmute yourself and ask a question. Thanks for being here today.
So much for organizing. One of the areas that that we've been looking at, and I don't know how much everyone is clued on, but there's some chatter now, even with Genesis sort of having paused withdrawals. Of course, if there is a contagion, of course there is there is blood on the street as we speak. My question is, how do you think, or how does one, as a sort of firm which invests in the space, or which is connecting capital to sort of projects in the space, how do you think the investors approach the space right now? Do you think there is going to be a complete shutout of projects, or there is going to be an area where you think there is still value for investors to sort of look at? What is the areas that one can sort of work with?
Yeah, well, thanks for the question, Tarun. I think that for the most part, you're going to have a lot of people that were playing around in crypto and blockchain, but these are just kind of normal venture funds or hedge funds, and they're going to likely be really scared away from crypto, maybe from blockchain entirely. And frankly, I think that's largely a good thing. They're now going to be a lot more likely to invest in real businesses solving problems, whether they're using blockchain or not, than kind of playing in this speculative crypto game. So yeah, for the most part, I think investors in the short term are going to be pretty scared. But I think, I've already spoken with, partners at VC firms that are managing hundreds of millions or billions of dollars that have maybe made, an investment or two into, kind of the Silicon Valley darling, crypto infrastructure type plays like an FTX, sometimes FTX specifically. And for those people that I've spoken to personally, at least, they haven't said that they're now done with blockchain. They're just going to be a lot more diligent about what opportunities they're going to be looking for in blockchain, and likely avoiding kind of anything crypto related. So there's still, I think, an incredible wealth of opportunities to invest in at really every stage. We're of course biased towards seeing a lot of great opportunities at the early stage, but yeah, I think there's still a ton of incredible opportunities for investors that are looking for companies using blockchain that are, solving an actual problem in the world that isn't related to crypto speculation. So there's no shortage of those opportunities. Happy to talk about more of those time permitting today. And of course, we have materials on the website on kind of how we see the opportunity set and some great example companies that maybe Dave can throw into the chat there. So thanks for the question, Tarun. Brent.
So hey Zach, how are you?
Good. It's been a busy week.
Yeah, it has been indeed. I'm also here with Sloan from the team, following some of the hacks and different things, and it's always curious why some of the timing happens right as you file, and so kind of question marks of is there fraud in addition to the broader fraud and different things that have been going on. But Sloan also had a more specific question. Yeah, well, I mean, I'm kind of curious of your thoughts about the hack. That seemed really
Yeah.
conveniently timed, but I also kind of wanted to hear what your thoughts on, obviously, Do Kwon this morning or late last night has come out and kind of talked about this auditing with LFG. And, you know, from an idea perspective, I really like the idea of a decentralized money. And I think that what Terra did a great job in is leveraging some of these newer ideas with really flashy UI, UX, and some of these really cool little mechanisms that were really interesting to work in and work around. But how do you see decentralized money fitting in the next year or two? Obviously, regulation looks really rocky for USDC types, but do you think it's going to be critical? Do you think it's going to be kind of left to the wayside? Do you think it's important?
Yeah, so thanks for the question. Couple things here quickly on, so we got hack, warning, decentralized money. So briefly on kind of the hack, yes, the timing is very convenient. I don't have any inside information here, but what I can say is, given that Sam has a history of perpetrating fraud and lying to basically everyone in his life, I think it would not surprise me if this hack was, related to his inner circle. And if it was not related to the inner circle, the likelihood that there's something more shady behind this than just purely a hack, to me, seems more probable than not. But again, we'll see. Realistically, if someone could have done that hack, there wasn't any meaningful change to the security apparatus during that time. So it has to do with the timing of everything going on. So again, is there a chance it was just someone being opportunistic and thinking, I should now spend more time trying to hack FTX because everything's happening, it's completely unrelated? Sure, it's possible, but seems unlikely. But ultimately, this is just speculation at this point and doesn't, even if I was like a crypto hedge fund manager, I wouldn't really see how to find, alpha in that. If you know that the hack's happening before anyone else, sure, maybe you can short ETH a little bit, but yeah, it doesn't seem too consequential until we know kind of the details, and whether that's, on-chain analysis as this continues or kind of good old-fashioned police work. I'm sure we'll learn about that as this, comes to light. Yeah, I'm just gonna skip the second question just to make room for everyone else and give you some proper time about decentralized money. So when people use the word decentralized, they're often referring to two different things, often at the same time, which is kind of the distribution of capital and finance, and then doing things illegally and explicitly against what governments want around the world. So when you look at what most DeFi is, it kind of applies to both of those things, which is, let's distribute capital to more people, let's make it easier to do these things, let's use distributed systems to take advantage of this, and then, oh yeah, this doesn't actually work unless we're kind of explicitly going against what governments and regulations of every developed country require. So decentralized money, in the way most people think about it, I don't think is going to proliferate, and I think that's a good thing. Ultimately, kind of giving the middle finger to governments and states around the world and trying to have your decentralized money that goes against these regulations proliferate is just a losing battle. And the longer it takes for that battle to be lost, the more money and smart people are going to be wasting their time on this. I was one of those people, I think, for a couple of years before, we kind of reoriented our thesis in 2019. So I definitely understand the value of potentially having something like that. It's just a question of, is that realistically possible in the world we live in, and at what cost? So something I'm really bullish about, though, is, more and more regulation of these, stable coins, to the point where they're just effectively, the exact same as fiat. So USDC, I think, is on that path towards there. Obviously, Tether is not, and is extremely likely to be insolvent, at least not having one-to-one deposits right now. So yeah, I think Tether, the sooner Tether blows up, the better. We've been saying that for years now. But yeah, USDC or other things like it, or direct central bank digital currencies proliferating as money that can be more easily distributed for more broader applications in the world, that's a really great thing, and something that we're working hard on at Unbounded right now. And for a real world example of that, for those of you that are familiar with what we do, you've probably heard the name Handcash before. This is one of our portfolio companies that is really the premier micro and nano payment company in the world today, and they have an SDK that allows you to take advantage of these micro and nano payments. And they have now signed agreements with Circle to be able to have everything they've done so far, which to date has been done on the BSV rails using the BSV token, but it's a huge letdown to people that you basically have to have exposure to BSV until a number of months ago, you'd actually buy BSV yourself. Now you can just kind of buy, use US dollars to buy BSV. But again, no one wants to use BSV. No one wants to use Ethereum to any of these crypto things to buy things. It's just easier in some ways. They want to use US dollars. They want to use the fiat currencies of whatever countries they live in. So rolling out relatively soon, they're going to have the ability to have distributed money that is US dollars to be used by anyone in the world, where the median transaction fee for using it is like 1/10,000th of a penny. So I'm really excited about kind of the distribution of money and not on the traditionally how decentralization is categorized. Dave, looks like you want to add something. Or no, just get on video. Okay. Well, anyone who wants to learn more about that, Dave wrote a great book about this. And we have kind of a whole chapter on kind of the decentralization myth. And Dave, if you want to maybe link to that exact chapter. Thanks, guys. Okay, Christian.
Hey, Zach, thanks to you and the Unbounded team for hosting this, very informative and helpful. So it's been great to listen over the last 20 minutes or so. I just had a question on your view on kind of, CZ and Binance's role and all that's kind of went down over the last, few weeks. Something I, obviously a very public spat between, the two heads of each company. And is it good for the industry to have kind of more consolidation into Binance and other of the big exchanges as we're likely to see here? And, do you think there's any role that CZ played into this that, they'd see further regulatory scrutiny or, anything that was actually out of line? Because just an interesting scenario. I know that, it's not entirely attributed to him at any point, but just curious on your whole view on his involvement in what went out.
Sure. So in terms of the other question you had, which is it a good thing for more consolidation towards Binance? No, 100% not good. Binance has systematically tried to evade regulations and law all around the world. They've moved jurisdictions many times. And yeah, I mean, there's no shortage of people that have written about all the shady things that they have done. I think the world will be a much better place when the Binances, the Coinbases, all of these exchanges that are kind of facilitating this negative sum game go away. So yeah, basically whatever can have that Binance, all these companies blow up as soon as possible with as little carnage to, regular people is kind of what I would hope for in the world and how this all develops. In terms of CZ's role, again, this would kind of all just be speculation at this point, but just given, when we talk to kind of insiders at some of the major, investment firms, exchanges and everything, people tend to know things earlier than when they happen. And, the kind of culture of, what would for equities be called insider trading has always been rampant within the crypto world. I remember when first getting started and probably like, it felt like maybe a majority of people that I'd go to at a crypto conference in 2017 or 2018 would like explicitly brag about insider trading as like the first thing that they like kind of introduce themselves as. So this is kind of the history of the industry. And yeah, I think it's extremely likely that CZ had advanced information on lots of things relative to FTX and used that information to what he thought was in Binance's, advantage. To the degree to which he's known things, it's hard to say. But yeah, I mean, CZ and Binance have definitely a long history of doing lots of shady things. And, this would only be an aberration if they, were not involved in some shady way in this.
Yeah, I'll add one thing there. I think, hindsight's 2020. A lot of people are now looking at the FTX situation. They're saying, how do we miss this? A bunch of like 20 somethings in the Bahamas doing these kind of like shitty things, interacting with Tether to a massive degree. All those things are true about Binance, but maybe worse. I mean, they don't even have a jurisdiction. They've lied about where they're based. At one point, they said that they're based in Malta, and the government in Malta was like, they're not based here. So I think it's like really an even more questionable situation, but on a much bigger scale. And I think one thing that could be happening here with, like this first wave of collapses and SBF being the hero and coming in and trying to save everything, and then now CZ kind of filling that role in like a Russian doll nesting situation where he's like the big dog. What could be happening there is that like they're trying to kind of save the underlying fraud in the system, which I think, if you kind of dig into Tether, with a skeptical eye for an hour, you'll see that that seems like pretty clearly not to be backed one-to-one. So there could be a situation where, you know, these are just kind of like layers of people trying to save the golden goose that's underlying the whole system.
Yeah, thanks, Dave. Well, I got a question in the chat here. So what do you think would happen to the Solana ecosystem? So to start with that, you know, we've been pretty vocal about the multiple, you know, frauds that the Solana leadership team has perpetrated over the years. We have a couple blog posts about it, you know, some Twitter threads. Maybe Dave, you could find kind of one of those things to post here. But yeah, in short, you know, I think there's a reason that when things don't line up, even if there's lots of growth, there's lots of potential money to be made in the short term, investors generally avoid investing in people that have known to lie or commit fraud, because ultimately those types of people don't change. No matter how big and successful they get, they're going to potentially do a fraud and risk it all, just like we saw with Sam Bankman-Fried. So he could have had this incredible cash cow of a hedge fund that was able to front run all of his customers on his other businesses, you know, trades, and make a great, you know, risk adjusted return and absolute return just doing that. And he could have had this great exchange business that was doing you know, billions of dollars in revenue potentially in a year or two and making great money. But no, he had to commit fraud and get even greedier. So, you know, this is kind of the behavior you see from people that, you know, are systematically committing fraud. And yeah, I don't think that language is too strong to use for how the Solana, you know, leadership team has handled, you know, which tokens are going to the foundation, which are going personally, how many tokens are there. There's a lot of people that have also written about this as well, and would encourage people that are interested to learn more about that. So with that in mind, you know, the long-term nature of Solana, when you kind of put that in mind, and you put in mind just kind of the fundamental flaws that have made it so the network has been down so many times this year, I am, you know, extremely bearish on the Solana ecosystem. Similar to Ethereum, the main thing they have going for them is that they have lots of developers and people that are excited to build on the network. From what we've been tracking, you kind of have the Ethereum, that's by far the most developers, builders, entrepreneurs in the crypto and blockchain world. And then you kind of have, you know, Solana and BSV that are, you know, well below that, but still a fair bit higher than kind of all the other blockchains. So from our account, Solana is probably the number 2, but not by so much more compared to what we're seeing in the BSV ecosystem. But ultimately, everyone that's building on Solana, for the most part, either came from Ethereum beforehand or came from not building in crypto and blockchain. So it might seem like a moat, but it can go away very quickly. The same way that people that tried to build businesses on Ethereum, and then when the blockchain didn't scale, the fees got too expensive, they moved to Solana. You know, for people that have an application that requires a blockchain to be up and running 100% of the time, I think it's really hard to say that, you know, I'm going to build my project on Solana and it's all okay. So yeah, I'm extremely bearish on the Solana ecosystem long term. And I think for a lot of people, they were also building in this because it was the easiest way to make easy money. So if you're someone that wants to, you know, turn a quick buck and you're entrepreneurial, you know, the best thing that you could have done is probably build something in DeFi on Solana or Ethereum over the past however many years. And, you know, with Solana's token price going up a lot and kind of ecosystem funds sloshing around with their inflated tokens and putting those back into projects, you know, it was easy to say, like, hey, I'm going to create this DeFi thing. I'm going to have my own token. I'm going to sell it and make personally millions, tens of millions of dollars. And, you know, 3, 6, 9, 12, maybe at a max 18 months to get your first liquidity. That started to change, but for the most part, there's still there was a lot of that until fairly recently happening in the Solana ecosystem. So with the price of the token being down so much and all these kind of, you know, really bad fundamentals, I'm quite bearish on the ecosystem.
I would add one thing there. I think the immediate concern for Solana speculators that are kind of shorter term time horizon is just the bankruptcy proceedings for FTX. If you look at the balance sheet that they're passing around as a try to raise emergency financing, it's a lot of Solana and Solana tokens, and the way that they mark those is, I mean, pretty ridiculous. But in any case, they have a lot of Solana, so if they have to liquidate that to pay out their the platform users, then that could be a very negative short-term event for Solana.
Yeah. Another question I got in the chat was, when do you expect the bear market to end? Are we at the bottom yet? So predicting markets is really, really, really hard. I think there's very few people that have ever done that consistently for any market. And, you know, we're spending our time at Unbounded, you know, researching, learning, supporting entrepreneurs, deciding which startups to invest in. So I don't really think that I have a big edge here. But I would say I would, make some small bet on, we're not at the bottom yet, just given kind of all the contagion that's happening. And I think crypto systemically, people that participate in those markets have just really, misjudged risk for many, many years. And I don't think this is an exception. You had BlockFi, Genesis as recently as days ago saying everything's okay. Genesis is now halting withdrawals. BlockFi is now, doing bankruptcy. We've been saying for years for people that have been on these, webinars that, companies like BlockFi, FTX, calling those out specifically, really just represent a terrible risk reward, such that if, any type of solvency event like this happens, or the price of BTC or Ethereum goes down very quickly, those lenders or those that are holding those deposits are going to be left holding the bag. So yeah, I think there's still a lot that could potentially happen. And, I would definitely, for similar reasons we've been saying for a while, caution anyone from having exposure to traditional crypto markets. Okay, we got a question. Who has levered exposure that might else go down? Gate, crypto.com, blockchain.com. Yeah, if I had to make a bet, I would bet on all three of those going down from what I've heard. I think, sending lots of money back and forth to one another for this proof of reserve thing that to some, I guess, meaningful minority of people in crypto satisfy what, in a normal company would have to be an actual audit from a legitimate firm is a little mind-boggling to me. But yeah, to so blatantly just try to game it that way and then say that everything is okay, that just, seems extremely unlikely that everything is okay there. And ultimately, if you're a platform that says you're never going to, intermingle customer funds and deposits, and then I forget which one it was, but it was either crypto.com or Gate, I think Crypto, that said that they had literally $2.5 billion of incorrectly marked Doge as 25% of their balance sheet. Pretty sure it was crypto.com. That's how you get to a place like that is just crazy for me. So on the off chance that they're still solvent now, you have to ask yourself, am I willing to take a bet on a company that somehow let their balance sheet be 25% of Dogecoin? And to me, that's a very easy pass on being a customer or investor. Hasn't been easy for a lot of people, but I think after what's recently happened, it's going to become increasingly easier, which will put a lot of pressure on these companies. So yeah, thanks for the question. Amin, yeah, thanks for joining today.
Yeah, hi, Zach. Yeah, I guess a couple of questions. I'm actually in Abu Dhabi at the moment. And we saw, there's the Milken conference going on, and CZ was on stage, and, Nouriel Roubini was also on stage and, had a few choice words. So I'm wondering, what's your take on, what do you think of Binance and some of the other centralized exchanges? We saw Gemini today, some news come out of there. Love to get your perspective specifically on Binance. Thanks.
Yeah, so just in general, I think the risk reward on investing in a Binance, Gemini, Kraken, and this later stage multi-billion-dollar valuation equity round, I couldn't imagine a world where that, I think, makes sense to me as an investment, just given how much has to go right to get, a 2 or 3x from there, and just the myriad of things that can go wrong that make that company less valuable or go out of business very quickly. In terms of kind of more specifically on Binance, what might happen in the near term, I think it's very likely that they've been doing lots of shady things. So the question is, how shady have they been, and have they rehypothecated customer assets in ways that they haven't said? They said they haven't. I don't know well enough to say if they have or not. But ultimately, yeah, long-term, very bearish on Binance. And I think the risk reward on using any of these exchanges, unless you're, a high frequency trader or some type of trader that's going to use it for a trade and take the money off, just really doesn't make sense for pretty much anyone to use. So thanks for the question, Amin. We got another question here in the chat, which is, what do you think of the stability of stablecoins, namely USDT, USDC, BUSD, Binance's stablecoin, DAI, USDD, which do you believe is the safest? So I think unequivocally, I think USDC is the safest, Dave. I'm not sure if you'd share that point of view, but it seems like very likely to me that USDC is the safest. Yeah, I think the likelihood that the Binance stablecoin is intermingled with a bunch of other things that they have going on. I mean, at minimum, whatever they're doing is not legal in a lot of the jurisdictions people are trading and investing in. That we know for sure. So yeah, the likelihood that those funds can be frozen, where even if they are backed 1-to-1, could you actually get all your money out if everyone tried to instantly? I would guess probably not, but you know, we'll only know when I think that eventually happens. DAI, you know, when you have this algorithmic stablecoin, even though you have kind of real assets and it's over collateralized, and when I say algorithmic, I don't mean it's, you know, kind of this fake, it's not backed by anything, but there's fundamentally an algorithm that's governing, okay, when are we going to sell this collateral? And ultimately, if you see kind of a big crash or liquidity crisis in something like Ethereum, then, you know, DAI is not going to fare well, and you'll be able to get your dollar out in kind of the event when you might need it most. So I would view DAI definitely with some serious risk. I can't say I'm familiar with USDD specifically, but those are kind of my thoughts on all the other ones. And I didn't name Tether again, but yeah, I kind of already covered that. And yes, Tether, I think, is extreme. Yeah, that's a good piece, Dave. Extreme amount of risk with having any exposure to Tether. And frankly, in the crypto markets today, if you have any exposure to crypto, you have exposure to Tether. There's really no way around that. The question. Anyone else here? I see probably like 8 people that have asked me questions over email or text over the week. Feel free to chime in here. I'd love to hear from you. Okay, we got another question in the chat here. Where do you ultimately see a bottom on the price of BTC? So if you say ultimately over a long enough time horizon, you know, we've said again and again that we think BTC is likely to be at or close to zero over a long enough time horizon. And that's primarily because when most people think about the value proposition of Bitcoin or BTC, they think about, okay, this is this, you know, anti-status money, or this is a store of value that's going to be good even if governments try to confiscate it or something. It's going to be my inflation hedge. It's going to be my if things go wrong hedge. But what happens when governments are able to successfully seize assets on chain? Most people don't view that as a likely thing to happen whatsoever. But you know, at Unbounded, we do. Dave wrote a great piece about it. Nice. Okay, already searching for it. I interviewed Dave at our New York Investor Summit about a couple months ago on this topic, where we kind of get into greater details there. Dave, you know, drop a link to that in the chat as well. I know we've got a lot of resources here, but just want to make sure everyone has everything they need. And yeah, I think if governments are successfully saying, hey, this is a Bitcoin wallet tied to Al-Qaeda, this is a Bitcoin wallet tied to a Chinese fentanyl dealer, this is a Bitcoin wallet tied to, you know, someone that hacked in exchange for billions of dollars. Those are all real examples of wallets that we know exist today. And I think it's only a matter of time before governments use kind of the court process the same way that they use it for seizing bank accounts to seize the assets of illicit gotten funds. And once that's able to be successful, I think for most people that have really thought through their Bitcoin thesis, they'll see that the core value proposition is now no longer there. From our view, it was never really there. But you know, there was kind of this illusion that this could keep going on for a while, or was likely to. And then you'll see kind of people start selling. And then once you see a lot of selling, ultimately people will realize this thing doesn't have any fundamental value. There's no real usage, adoption, utility on top of the network. So then I think you'll see kind of a, you know, massive sell-off, and whether that ends at zero or something close to it, I think it's hard to say. But we think it's a lot more likely to happen, not over like an incredibly long time horizon, but no, I'd say a lot more likely than not over the next 5 years to occur. Dave, you want to add anything as you kind of wrote the piece and spearheaded this research?
No, I think you summarized it well. I linked to the coin seizure article and also the interview that Zach and I did in New York earlier this year.
Hi, Zach. This is Peter. I don't know if you can hear me. I wanted to ask you about regulation that may ensue based on the FTX and even prosecution of Sam as well.
Yeah, so I would need to learn more about the specifics to comment specifically on, okay, I now see this or that regulation being likely. But our general perspective on regulation in crypto is not that you actually need more of, you just need the enforcement of existing financial regulations. So committing fraud, selling unregistered securities has been illegal for many, many years. And that's, the core of what Sam and, the gang at FTX has done. And from my perspective, you wouldn't need to have any new laws or regulations to, enforce, jail time and other punishment on these actors. Similar to, pretty much every crypto asset and companies in that ecosystem today is likely violating some type of financial regulation that exists already today. So I think when crypto people talk about, new regulation, it's about giving exemptions for crypto because it's special. And, I see that as, of course, a lot less likely after this blow up now, but don't generally feel the need for any new regulations, just better enforcement. And in terms of like seizing assets on chain, like if we were running, whatever the governing body, that would probably make sense to lead that, probably the CFTC, perhaps, the DEA, but to lead, okay, we're going to seize assets on chain. We could have probably done it by now, or at least got the process started where there's been court orders for miners around the world. So I think there's definitely, generally in the world today, but of course, especially in governments, a lack of crypto and blockchain savviness that has made it so enforcement that would have been really good for the world, good for this, the industry of actual blockchain, not good for crypto, of course, but if there was better savviness, this would have happened years ago, and it will probably still take a little more time, but this event just makes those types of things a lot more likely to happen.
Right. Okay. Thank you very much.
Yeah. Thanks, Peter.
Yeah, I think we're going to see a lot more scrutiny as kind of the immediate ramification of the FTX collapse. And I think that will probably start tangential to FTX. So companies like Tether, I think will be looked at much more closely. That's kind of already been underway for a few years with their lawsuit with the Attorney General of New York. But given the relationship with Tether, I think the number is like $30 billion in redemptions. So, allegedly FTX sent Tether $30 billion and then redeemed those Tethers directly back one-to-one. That seems very unlikely to me. So I think digging into that and kind of unwinding the whole FTX situation might lead to a more short-term impact for Tether, which would have, that introduces, I think, systemic risk across the whole crypto landscape.
Yeah, thanks for that, Dave. So we got a new question in the chat here. What is your view on big VCs, Sequoia, Andreessen Horowitz, that took part in FTX investment rounds? Did they perpetuate these higher valuations? Have they made other similar investments? Do you see them, suffering heavy losses in the contagion to come? So, yeah, I think anytime you have what is viewed as like one of the top investors in the space saying, hey, like this is a great company, we're putting our money behind it, that will perpetrate a much higher valuation than if that event didn't happen. I also wouldn't put Sequoia and Andreessen Horowitz in the same category. Sequoia has backed maybe a relatively small number of what they view as infrastructure players, where Andreessen Horowitz, has systematically kind of pumped companies at extremely high valuations that the partners likely knew were never to really be good investments, in return for getting a lot of tokens, which they can get liquid on soon, and then use and kind of arbitrage their brand, say, hey, this is a great long-term project, everyone else should buy in. Months, a year or two later, they sell these tokens to retail and they make a bunch of money. And even if, these tokens now go to zero, the company goes to zero, they do just great, and kind of largely like retail investors are left holding that bag. So yeah, I think there's definitely a big distinction between VCs like that. Frankly, a pretty high percentage of what are generally respected and seen as tier 1 VCs in Silicon Valley invested in FTX. And, yes, while that may or may not have been a mistake for given firms based on how they do diligence, it's very different than kind of, raising a multi-billion-dollar crypto funds that's systematically investing in tokens and companies that profit off tokens. Have they made similar investments? Yeah, the answer is yes. Sequoia, lots of VCs have made similar investments, but I think for those that have been dabbling in crypto and blockchain, they're likely to not dabble at all, or dabble a lot more thoughtfully. And do I see them suffering heavy losses? In Andreessen Horowitz's crypto fund, 100%. Yeah, I've said from the beginning that I think it's I don't see how they return capital in that fund long term. The only way that could be the case is, I think, if you end up looking at the returns, lots of tokens that are sold, within a couple of years after backing the projects. But fundamentally, DeFi, decentralized crypto speculation, has to continue to proliferate at higher and higher heights for a thesis like that to work out. And I just view that as quite unlikely. Yeah, so thanks for the question. We have another question here, which is, so you voiced bearish comments on Solana. What is the catalyst pushing a developer to switch blockchains? Is it the downtime you mentioned or something else? So I think it's, in general, if you're building a real business using blockchain, you can still make money and build some type of business in DeFi, but that's very different. So definitely, inefficient blockchains, account-based blockchains can be quite good for DeFi, potentially even better than like a really scalable cash system blockchain like Bitcoin. But we view that as a pretty narrow and likely shrinking market over time. So when I talk about switching blockchains, I'm not going to talk about kind of the DeFi speculative Web3 use case. I'm going to talk about what we focus on Unbounded, which is like an actual business, ideally that's obfuscating crypto or blockchain whatsoever and just providing a great product or service. So when we talk to those types of developers or entrepreneurs, what we're seeing is if the fees get way too high, it makes it unsustainable to build on that blockchain. So for example, like one of our portfolio companies is called DXS, and they invest in US equities and US equity derivatives in increments as low as, and you could invest in those using their platform in increments as low as 1 cent. They're only able to offer that because the median transaction fee on the blockchain they're using, Bitcoin SV, is 1/10,000th of a penny. So as a result, if their fees go to even, a penny, their business model doesn't completely die, but it gets a lot less profitable pretty quickly. So it really just depends on the business model. And, for most businesses in crypto, in terms of where the dollars are going to, it's like very wealthy people irresponsibly betting on, JPEGs and glorified Ponzi schemes. So the difference between $1, $5, 10th of a cent in fees don't really matter. But for a real business, these fees can actually matter. And if you see, hey, I built on a blockchain, and since I built on it, the fees are up 20x, 50x, 100x, 1000x, like they are on pretty much all the major, popular blockchains in the world today, Solana, Ethereum, Polygon, then yeah, I think that's going to be one of the primary motivating factors. And then if you've built a business that, some way connected to the crypto financial world or something that requires 24/7 access, if you've seen now, okay, if you built on Solana 2 years ago, the network's probably been down something like 20+ times for a meaningful amount of time, where you've trusted a single-digit amount of people to get the network started again in the way that you had it before, that would be very concerning. And it is for a lot of the people that we're speaking with. So there's definitely a lot of crypto diehards about a given chain that are going to kind of go down with the ship. But for most people building real businesses, which today is still a fraction of what's happening in the crypto world, they're looking at all their options, and when they see these blockchains no longer scaling, they either decide to kind of not really use the blockchain part of it, whether they obfuscate that or tell their users that, or they look at a chain that actually scales. And we've seen entrepreneurs now move over from Solana, Ethereum, Hyperledger, Polygon, and others to BSV for this very reason. So
one thing that I think will help facilitate that also is just the development of more tools, making it really easy to port projects over. So we've seen a lot of those in the Bitcoin SV space, primarily making it easy to transfer Solidity contracts for Ethereum and then turn those into Bitcoin SV smart contracts with really just like a few clicks. So I think we'll see more of those types of projects catering to these other, like Ethereum killers like Solana in the future, and just lowering that barrier to entry, I think, will make it kind of a no-brainer to move your project over to a blockchain with more uptime and more reliability and lower fees also.